Welcome back now at 7:45. A better than expected inflation report fuels the Federal Reserve. Hopes that the Federal Reserve will finally cut interest rates. It's been a huge topic of discussion after a years-long battle against soaring prices. Financial advisor George Pikounis from Burns Financials joining us now to explain why there is some optimism on the horizon. Good morning. How are you?
Good morning. Thanks for having me.
Yeah, absolutely. All right. So look, we got this inflation report on Wednesday showing 2.9% inflation, the lowest we've seen since March of 2021. And now everyone's saying, okay, Fed, your turn, right?
Yeah. I think it's wild to, we get excited about 2.9%, right? But I think a couple years ago we were at over 9%. So things are definitely starting to trend in a positive direction, and you're starting to see that with the CPI data in general. So at this point, yes, we're looking at next step would be for the Fed to finally cut rates, which would be the first time in 4 years that we actually see a pullback in these rates.
So let's talk about that then, because there have been economists, investors over the last several months arguing that, the Fed should have cut rates sooner. Does the fact that we see inflation cooling more than economists expected prove that the Fed's plan to cool inflation is actually working?
I'd say yes. The whole sooner rather than later type thing, it's always going to be up for debate. In hindsight, it's always easier to look back, right, and say, oh, we should have done this sooner. There's a lot of information out there when you're looking at the economy as a whole. So I think this again signals that it is time to finally make these cuts, and we're hoping that it does officially happen in September. The percentage chances now, I think, around 66 to 70% chance that it does in fact go through. So, I don't want to sit here and say fingers crossed, but things are looking good and trending the right direction for that.
So, if this does happen in September, obviously you see some movement when things like these happen, but a lot it's already baked in to the market with investors expecting this at some point. So how should you, if you're an investor, kind of deal with this going forward, or is it too late to even react?
I always say temper expectations, and in terms of outlook and things along those lines, yes, a lot of times things are baked into what we're seeing. This week has been extremely positive, but it looks like things are a slight pullback today. So investor sentiment should still be for long-term, future, right? Like if we're looking at a dip and things like that, well, that was a couple weeks ago. But that being said, if rates do come back down, yes, there should be positive correlation there. So I wouldn't say it's you missed the boat or anything like that. We're looking for positive traction in our portfolios too. So it's not like we're making knee-jerk reactions for this type of stuff. You have to realize the things are going to go up and down along the way. And I'd stick to strategy at this point.
All right, that's always the long-term strategy. Always seems like it's the most successful, right?
Yeah.
All right, thank you, George. We appreciate you. Have a good weekend.
Thanks a lot. Thanks for having me. You too.